The most significant challenge that most traders face is that they struggle to accurately and correctly identify the market structure. Today, not only will I showcase and explain these two trades to you, but you will also gain a comprehensive understanding of how to correctly identify market structure, as well as what a thorough top-down analysis actually entails in practice. To begin with, I will present the two trades. This is a trade with an 11 risk-reward ratio with a target of 340 pips. We can see how the target is reached. The second trade setup features an impressive 7.65 risk-reward ratio with a profit target of 200 pips. Here as well, the target is reached. Everything starts with this analysis. This essentially indicates to us the following. The price will create a significant break of the market structure right at this specific point, and it will subsequently form a brand new 4-hour structure. And after this break occurs, the price will very likely reach this particular area of interest, an area of interest that has been clearly marked on the 4-hour time frame, but it is drawn with direct reference to the overall daily structure. Once this specific area has been reached, there is a high probability that the price will drop from this point and establish a brand new structure for us, but in this case, a daily structure. Now let's play it and observe that this is exactly what happens. Next, we will move on to technical analysis and perform a thorough top-down analysis. Everything starts with the daily structure. The daily market structure typically looks as follows. First, we identify a clear liquidity point and a corresponding structural point. Next, we can observe exactly how this structural point behaves. From this specific level, the price action shows it being taken out completely, and as a result of this movement, this previous structural point effectively transforms and becomes a new liquidity point for us to monitor. Essentially, what this means for our analysis is that this specific high point now functions as a critical structural point on the chart. Consequently, as we look at the market moving forward, we are anticipating that the price will continue to rise until it reaches a certain key level, at which point we expect it to begin a downward reversal, which is exactly what happens. But that's not important right now. So, starting right from this very moment, we are looking for the daily structure, which is a very important factor to consider, to clearly show us a significant increase in price followed immediately by a steady decrease back down. So this essentially means that for us, any opportunities for entering sell trades are viewed as trend continuation trades that follow the momentum, while any potential opportunities for buy trades are considered to be riskier counter-trend trades that go against the prevailing market direction. For example, this would have been a typical counter-trend trade, which is exactly what we did. As you can clearly see here on the chart, we are looking at a counter-trend trade setup, but in this specific market situation, these particular trades will generally have a much smaller and more conservative profit target. As you can clearly see from the chart, the profit target has been successfully reached. Also, here is a second counter-trend trade, which is a trade with a risk-to-reward ratio of 1:7 and a total target of 165 pips. As you can see, the target is reached. Because these positions are counter-trend trades, we obviously have a much smaller profit target. Let's continue with our analysis. With that being said, when we take a closer look at the daily price structure, we can clearly observe a much lower internal structure, specifically focusing on what appears to be a 4-hour market structure. Let's mark the 4-hour structure, which looks exactly like this. We have a structural point, a liquidity point. We can clearly see how this structural point is removed by this market impulse, an impulse which serves as the direct cause of this movement. This is a break of structure, and this low point becomes a liquidity point. This means that the prevailing upward direction and momentum of the daily structure can eventually undergo a shift and transition into a full reversal. As we can see when we examine the charts, the 4-hour structure is currently creating a clear and distinct new structural point for our analysis. We have reached a key liquidity point. After this specific move, we notice a clear shift in the market momentum and a new trend change on the 4-hour chart. But this change actually indicates a possible increase in the overall long-term daily structure. we continue to see a significant structural point being created within the market, in this case, a critical zone of liquidity forming right at this specific moment. But it is absolutely essential for us to carefully observe and note that this 4-hour liquidity point can actually represent only a potential area of interest rather than a confirmed reversal signal as part of the overall market structure for the daily time frame structure. So, this specific 4-hour liquidity point serves as a significant marker that can effectively represent a structural point on the daily structure. As we can see, looking closely at this specific 4-hour structure, we are dealing with another, smaller internal structure. In this particular market situation, it's the 1-hour structure we need to focus on, which is displayed in the following way. At this point, first, we identified the liquidity point and the key structural point. Next, we are going to transition down to a 30-minute time frame, which will allow us to more properly and clearly visualize this specific 1-hour market structure. As you can clearly see on the chart, immediately after the initial creation of this 1-hour liquidity point, we find ourselves dealing with a very strong market impulse. This is an impulse that successfully creates a significant break of structure within the overall 1-hour framework, which is then followed by a series of further structural breaks as the trend continues to develop. This also tells us that the liquidity point, specifically the 4-hour timeframe liquidity point, may have finally reached a state of complete market saturation. So this is a significant new reason and provides us with a new confirmation for our strategy. In order for us to execute this trade effectively, sell trade, the very first and undoubtedly most important reason to consider is that this specific point can actually represent for us the fundamental creation of what we would define as a significant one-day structural point within the broader context of our analysis. So, now let's do a very quick recap of everything. If you look at this point here, this highest peak on the 1-hour time frame, on the 1-hour structure, it represents a liquidity point. Similarly, on the 4-hour structure, it also represents a liquidity point. But on the daily structure, it actually represents a structural point. This is precisely the reason why we decided to execute this particular sell trade. Next, for the second trade, this trade with a 7.75 risk-reward ratio with 200 pips in profit, we will follow the 4-hour structure. The 4-hour structure, this creates a significant break in the market structure, marking a distinct change of character from a consistent upward movement to a new downward movement. This development actually indicates to us very clearly that the overall direction of the daily structure is also effectively changing. And at this specific point in time, the market shifts decisively from an established upward movement to a fresh downward one. As we can clearly see here, this distinct movement leaves behind a very important and significant area, a crucial decision zone. In this particular case, and this decision zone now effectively and officially becomes our main primary new point of interest. This is essentially a trade executed without any confirmation, taken relying solely on the decision zone of the 4-hour time frame market structure break. So basically, if we were to continue drawing these zones, it would look like this. It is exactly like this for the 1-hour structure, and it is exactly like this for the whole 4-hour structure. This provides a small but clear example of exactly how I identify and visualize these market structures. But of course, all of this deep technical knowledge only came after I spent thousands of dedicated hours sitting in front of the screen analyzing charts. In the upcoming series of videos, we are going to go step by step through every single core concept in detail, including the specific methodology of how I select these important zones of interest and much more. Obviously, how we identify structure on several different currency pairs, since the price action prints out quite differently, and it is never the same thing.